Hello there, this is fairbinaryoptions.com, and we are heading into an important week in front of us. I'm talking about, of course, the FOMC meeting and the FOMC statement and the Federal Reserve Open Market Committee and the press conference with Miss Yellen, and everything is going to be about the US dollar. I would like to prepare, if you want, a bearish scenario here, and with that I guess I rest my case, because a bearish scenario can only mean a put option recommendation. Now this Euro US dollar, it is bearish from both a fundamental and a technical point of view. This move here that is channeling, simply channeling to well, let me make it of a different color, so simply channeling to well suggests that our whole pattern up to this moment here can be labeled as an X-ray. From this moment of time, we should look at the market as forming a contracting triangle. This contracting triangle here, that of course broke lower, and not only that it broke lower, but it is forming, or this triangle is forming after a move that is simply channeling to a corrective wave. What I'm trying to say is that there are all the chances in the world that actually this low here would be the end of a first wave from the all-important 140 level. The first wave to end here. The second wave to end with the running variation of a contracting triangle. And now everybody's looking for the Fed to come and do what? Well, for the Fed to come and be bullish. I would say that the market is not pricing in fairly enough the possibility of a hawkish statement from Ms. Yellen, and that would translate with a third wave to the downside. You might say, alright, so this is the third wave. No, because we don't have any extension. In order for the third wave, we need to have a Fibonacci expansion, and we need to have a move that should go more than 161.8 when compared with the first wave. You might say, alright, but how come the second wave to end below the lows in the first wave? Well, this is happening on running variations of a corrective move. In our case, it is being called a double three running. How should it be labeled? It should be labeled A, B, C, flat, X wave, contracting triangle, then A, B, C, D, E, and then the third wave to come. So the second wave, from my point of view, might end, or probably ended around here, so not here. So this scenario is a bit, let's say, conservative, because it implies that 161.8 should come at, and that is interesting, heading into the FOMC. Minimum to come, 1.2620 area, so not here but the 100%. I'm just saying that this is a bearish scenario, and while the market is forming this pattern here before the FOMC, then the path of least resistance, at least for the Euro US dollar, next week is to go and trade the pair with a bearish eyes, therefore with put options. I mean, come on, take a look here at the 100% level, how the market is forming a corrective wave. So we are doomed for another move lower. I don't know if you are a US dollar lover or a euro lover, how you are implicated, and so on and so forth, but this market here is screaming for lower levels, and I am just buying put options with end of week expiration date. Well, this is the trading plan for next week heading into the FOMC. Keep in mind that the FOMC is actually going to come on Wednesday, and probably Monday and Tuesday will just have spikes and slow moves, but nevertheless the market, I would say, already positioned for the FOMC. 2620 as a target for the regular spot market, put options end of week expiration date for the regular binary options trading like we have here. Thank you very much. Have a great day. Have a great Sunday still. This is fairbinaryoptions.com, Make sure you check our analysis on the website. Make sure you check our Binary Options Academy, as we have a lot of projects there and a lot of analysis to be seen. Thank you, and bye bye.